Okay. Now I'm going to teach you a little bit of a trick. Okay. Whenever we are running into a sustained price run, and then we have a very nice, obvious, clear blast off type finishing of the move. This is like the grand finale. Okay. Whenever you see that type of stuff, you want to look at the price run that took place right before. You don't want to use just that. That's not enough. Okay. You want to see this type of move here, from here to here. What is this line I gave you? Like, what did I say that was on X? What did I say that was? That's my interest. If we gap down lower, okay. Now let me paint a picture for you. If we open at 100 even, it doesn't matter what market it is, but if we open at 100 even, and the previous day we closed at 125, but the low of the previous day was 120. What's the first price it's going to go back to before it completely closes that gap if it's going to go to the close? The close is just the best case fill of said gap. What do you think the lowest threshold of a gap closure would be? Previous session's low. See that? Okay, so we're not locked into it has to be a return back to the previous day's close. Everybody understands that. Everybody understands that. But there's many times where the market will just simply go back to the previous day's low, not get to the close, and then trade softer or go lower. So we saw that short term to intermediate term, if you're looking at intraday, draw back down in, take out that short term low, and then they ramped it up, taking out this high. Now, I liked the idea of it when it opened here and ran above that high. It was beautiful because what that set up was the stage for drawing back down into this volume imbalance. And it need not even get there. It just gives me a high probability condition to be shorting in a primary bull market. Okay. So I'm teaching climax reversal patterns this year. Okay. It's kind of like the flavor of 2026. And I'm not fearful of going short in primary bull markets. And with experience, you won't be either because there's really nothing different about this market once you have the understanding. Once you have a little bit of experience, you know what you're looking for. If you're using a stop loss, the stop loss is going to do its job. If you don't over leverage, which is what you should be doing anyway, it's not going to hurt you if you do it wrong and you get stopped out. So while I do promote the idea that someone brand new, someone new, someone that, in my opinion, has less than a year's experience, you shouldn't try to short primary bull markets like this. Focus on trying to go long when and where you can. It'll be more forgiving to you, and the chances of you having the wherewithal or the conviction and confidence to hold on to a short in this type of market when you're brand new or less experienced than someone that's been doing it a little bit longer than a year. And I'm saying a year as is a minimum criteria. I think closer to 2 years is more appropriate. But then we had this morning during the pre-market session time, this very, very parabolic little runoff here. I love seeing something like that. I absolutely love seeing that. If you look at what we have during this price run up, okay, if we see this big blow off run, we want to look at the inefficiency down in here because it's part of what? A breaker. We've already moved away from utilizing this as an inversion fair value gap. I can't do anything with that. I'm not in front of the charts. Otherwise, that would be I would have went short there because there's two things there. Two things. We have inversion fair value gap and a bearish fair value gap. The market's trading up into it. Look at the body staying in there, respecting both. Let me zoom in a little bit. I'm afraid I'm going to mess this up. I think it was this morning or whatever video I just did last. Every time I do a zoom with my fingers and spreading open on my touchpad thing that's built into this laptop, sometimes it does a whole screen zoom. And once it does that, for whatever reason, this thing, I think it's old. It won't let go of it. It won't let me bring it back. So I end up having to refresh the page. But here's that buy side and balance, sell side efficiency. Okay, so that would look like this. If you were in front of the price action, which I was not, You see how the body staying there? And the same thing in respect to this fair value gap there. See how handsome that is? That is just perfect. That's precision. Okay. You don't need to look inside candles. You don't need to look at any kind of volume profile, no footprint, no level two data. You don't need to see any of that stuff. You can't get any more simpler than just simply looking at where are these little inefficiencies at after a blow off run. Okay. And we've just taken all time highs, but there's a big volume imbalance down there. It's the same thing as if there was no price traded at all. Whereas we see some wicks inside that volume imbalance on the daily chart, the same thing we would expect, just like an opening range gap. It wants to draw back into that gap. It needs to feel, if you want to personify it like I'm trying to do here, it needs to feel balanced. It needs to feel like it's offering a fair price to the marketplace. If that's a globally accepted way of expressing it in our community. It's not the best way, but it's the best I got right now because we're live streaming. Okay. So the inefficiencies in here perfectly delivering with the bodies. They have a little bit of a mohawk in here, but the second one's lower than that one. I love to see that. So if we get a mohawk here and comes back in and we start to see another one in here, I demand that that second one be lower than the previous one. And we get that there. Isn't that nice? Steve Nielsen never talked about that. Isn't that interesting? Here, look what we've done. This candlestick or any candle after that one right here, it should have been able to, if it was going to do it at all, it should have touched the high of this right here. And I don't even have it on the full thing, do I? I have it short of that volume imbalance right there. That's the more appropriate way of doing it. Old eyes, folks. Okay, old eyes. So it should have touched the high. It didn't even do it. Is that weak or is that strong? That's weak. And then once we got below consequent encroachment, look at the bodies. We left it here. We couldn't ever go back to it again. And then we left it here. Same thing. It should have been able to come back up here if it was going to, but it was not willing to do it. That to me is indicative of a market that's weak. So I'm going to go in there and I'm going to probe it, look for a short, ride it to this level here if it can get to it. And then I'm going to weigh out how much time it took to get to it. Now, time, that's the central tenet to this idea. Okay. How much time does it take to get there? If it's going to be like real lethargic and just taking a whole lot of time from moving from this inversion fair value gap down to this liquidity pool, if it's going to take its time doing it, that's not indicative of a market that's weak. Then I'm probably wrong about my opinions about what I just said when we first started this live stream about the daily chart. So I'm going to be looking for clues, okay, that will really inspire me to trust the fact that this market is absolutely heavy and that daily chart was an exhaustion and it ran out previous highs just to knock out anyone that's short. And if we get a big washout day, which looks like we have here, then that might be helpful going forward for the next couple of days. And I might be more inclined to take heavier shorts, whereas I've been taking small short positions. I could build up larger positions and go back to what I was doing, where you saw me pyramiding and building up larger and larger trade sizes. Well, here in all this price run, here to here to here, all these very nice, obvious pools of liquidity. But then we had these inefficiencies like this. Notice this one, it sliced right through it, but then couldn't even get back to consequent encroachment. The body couldn't even touch this and stay touched to the low of it. There was no body at all. Once it went through it, when we're bearish, how much time is it spending here? One single candle. That one candle's body is the only thing that's laying inside there. Sure, we got a wick that traded up to it, but it couldn't even touch the consequent encroachment. Again, I ask you based on what I teach as real order flow visually. You don't need any gimmicks. The open, high, low, and close will tell you everything, but you have to know the language. If you don't know the language, then there's no conversation between you and price, is it? It's going to seem like, well, it's doing whatever it wants to do, and I don't know what it is. So give me something else to distract myself from not knowing what it is it's doing. I'll look at some numbers and attribute that as the religion I'll believe in, because that's what everybody else is doing. And if you're making money, God bless you. Okay, but I'm trying to teach some of you that feel like There's no other way but to do those types of things. I'm just saying, if that stuff interests you, don't take what I'm saying and not pursue it. Go pursue it because it might make you better. It might help you. Whenever we are running into a sustained price run, and then we have a very nice, obvious, clear blast off type finishing of the move. This is like the grand finale. Okay. Whenever you see that type of stuff, you want to look at the price run that took place right before. You don't want to use just that. That's not enough. Okay. You want to see this type of move here, from here to here. What is this line I gave you? Like, what did I say that was on X? What did I say that was? That's my interest. Okay. So if we can break below that, this might act as a fulcrum point. Now, what's a fulcrum point? Imagine this line is the door hinge of your front door at your home. Okay. And this is the door. So if this is a swing point where the fulcrum would allow the door from here and it swings down, it would go down a certain degree, but it's only going to move as far as the width of the door, right? So this point is like halfway. This is the highest point, halfway point. A measured move could be taken from this high, projected straight down. And that gives you a ballpark figure of about this vicinity right in here. Okay. And you'll do the math and do your own projections to get that actual level. But what I like to do is apply a little bit of technical science. Okay. The same type of projection method that I teach with my standard deviations with Asian range, central bank dealers range, flout, opening range gaps. Okay. All those types of things can be applied here and you can get some really stunning precision. Okay. And that what I'm going to show you, I want you to think about this and try to think where you ever saw this before because you didn't see it anywhere else. Okay. It's not there. But now watch. If you go to this little thing down here, it's a Fibonacci. And this is super secret now. Okay. Please don't put this on your live streams. Please don't do this. Don't teach it in your mentorships. Don't teach it in your discords. Because if you teach it, it's probably going to stop working. It's probably going to stop working and I'm going to have to do something else. Okay. I'm going to go back to delivering pizzas. So we go to the high, put it right there. Okay. And this is complicated. You're going to drag it down to that low right there. Now, get yourself a drink, calm down, because that was a lot. Okay. That right there takes a lot out of someone. And I don't know about you, but I need a drink. All right. So now let's assume for a moment we take a visual of this. Okay. And if we duplicate that, now I'll show you what I mean. Let's look at it like this. Here's, I got to fix that in a second. Got to go back on the actual low. Am I boring any of you? Are you having fun? You missed me. I know you did. I missed talking to all of you. I did. There we go. All right. So that's the range that we're going to be using to duplicate or run standard deviations away from this. Okay. So a perfect deviation would be here. And that gives us one multiple of this range from that low up to that high projected straight down. It's about right there. So that means at this low over here is very, very likely to happen. Okay. So now watch what happens when we take this idea and we put a little bit of market wizardry and add it to that. Okay. We're going to go in here and where is my standard deviations? -2. Okay. -2. I want you to look at the low of the chart, the bottom of the chart. You'll see a line appear and disappear. Ready? See that? See that? 29,878.75. See that right there? Isn't that cool? Now watch. Extend to the right. Oh my goodness. That looks like it's the low of the day. Retell me this. Yeah. So if we break this line, this is an interesting level to me because I want to see how it trades. Okay. It drops down. Wonderful. Okay. Great. I want to be part of that. So I got to wait until the opening bell. I got to get in there when it starts trading. So we see this move here. It gets down into this little gap that little buy side and balance, sell side efficiency. Why am I picking this one? Why do you have that one, ICT? Well, whoa! That's the man that's the name that shall not be spoken, right? Why is this one picked, Michael? What's the deal with that? Why are you picking that one? You're just cherry picking. You're just cherry picking it now. That's all it is. You're just making it up as you go. You're resetting your account. Watch. Buy side and balance, sell side and efficiency. Can we make it a little wider? You can see it. I'm gonna mess around here and it's gonna cause me a problem. All right. Let's see. We're gonna zoom in right here. I'll have you know this is not easy to do with a touchpad. Okay. So respect my grind. This right here, that buy side and balance, sell side and efficiency, gets delivered to here. So it's rebalanced. Okay. It goes up, down, and leaves it. That means this is balanced. But what was its first utilization? Huh? First utilization. Buy side and balance, sell side and efficiency. So if we're bearish, what will this become? If we trade lower, it's going to be an inversion fair value gap. How do we know it's going to be an inversion fair value gap, Michael? Because it was utilized as a bullish fair value gap first. Oh my goodness. You're teaching me how to pick the real fair value gaps and when to pick the real inversion fair value. Exactly. As daddy only can. So when we have this and we're looking for lower prices, look how it sliced right through that. It couldn't even get back to consequent encroachment, which is important because it used it here to go higher. Now stop for a second. I said a lot of things already. And for someone that's brand new, it seems like a whirlwind of word salad. But for many of you that have been around for a while and you've been trying to find the secret to deciphering when fair value gaps should form, which ones to pick, I'm giving you the very specific criteria. You don't need to buy my books. You understand? I'm teaching it here on the channel for free. The books are just simple little rules. Here's what it is here, an example here and there. That's it. It's just me getting the credit that's deserved so that we can take it right back and channel it right to the Lord because that's where it comes from. Okay. So when we look at how we leave this area and we quickly drop down into this level, how we got there so quickly, that indicates to me that I do want to be short and I do want to be looking for lower targets. But here's where I did it wrong. What May 27th, 2026 at 2:33. I like the time. I'm just tossing it in there just for you, Kit. Not that there's a specific time importance there. I just did that because, I ain't talked to you in a while. So the idea of anticipating a PM session sell off, I was affording myself the luxury of being able to capitalize on that. Okay. And I was going to tape read that with you today. But, the market being what it is, it felt inclined to just go through everything like a freight train and trade all the way down to the target that this big blow off run here and Michael's market structure, institutional market structure, refer back to this low here.